Good morning, Andy here. Another exciting morning of live sniper scalping trading here in the main room. So crude oil continues to increase its volatility, increase its average range. Momentum is awesome. This is the crude oil that we're used to over the last 10 weeks, over the summer and so on. You know, it was fine. We did absolutely great. The magnitude of what we can do in environments like this, you know, it just takes it to a whole new level, and that's very exciting. And let's go through a live trading sniper scalping recap session. I executed, I believe, 13 trades today. 8 or 9 winners, 3 break-evens, and 1 losing trade live in the room this morning. The pre-market before that was really outstanding. I had a very quality pre-market. I think I had 5 trades, 5 wins before I started broadcasting the live trades in the main room. So let's just, because of the quality action and the amount of price bars due to that quality action, we're not going to go as far back in the morning as we sometimes do. We'll start right around 9:15. And for those of you that are watching this recording and not sniper owners, I'm going to take a little bit of time in the beginning here to describe the black line cross, the extreme auto signal calling indicator, which we call our black line cross system. Down here on this colored indicator, you'll see the colored lines and then a white gap and then the gray area. Well, when that black line crosses from the colored area to the gray area, as long as there's a down closed bar, we get an arrow, which is an auto-generated signal. I didn't place any of these markers on the screen. I placed the circles, the big ovals that I put around the arrows on the screen manually just to highlight. But the arrows and the standard sniper dots, that's all auto-generated. Pretty powerful, pretty exciting. And you can see when the black line crossed from the colored area to the gray area, boom, short, big winner. Buy trade here, a little bit more aggressive, not a trade that our short-term trend following traders would have executed, but nonetheless a nice winner to the buy side. This is a trade all groups of sniper owners would be on. Great continuation to the downside. One point I want you guys to notice, look at our action line. We have an action line pivot high here, and then what happens right here? It's a lower high. It's a lower high on our action line. That makes this next signal to the downside a very quality signal coming after the action line puts in a lower high pivot. And then, of course, we've got just a really nice momentum move to the downsides, makes these 2 sell signals really nice. You can see the black line touches the colored area and then goes back to the gray. That generates this signal. Black line comes up into the positive area. We got the buy. Why are the vast majority of sniper owners going to pass on that buy? Because there's no confirmation whatsoever. We have a action line that's doing nothing but trade lower. We didn't get any real bottoming confirmation. So that's easy to stay off of that one. Easy to stay off of this one. Okay, now this signal down here, let me go ahead and put a circle around it. I wouldn't enter that signal right at the signal like we do with a lot of these trades, but rather wait for a little bit of trend confirmation. Wait for the action line to start sloping higher. Okay, the action line slopes higher. It goes from black to yellow again. Boom, get long there. Nice winner. Okay, we're not going to take a lot of time to discuss this right now, but that's what short-term trend following sniper owners do. They wait for the action line to confirm, as well as a couple other things, and boom, they get in there. Nice winner. As we continue on, we got a couple of great shorts for a win. The first one is a little bit, well, depends on, this may only be one trade. You know, if you are using the more robust stop management strategy, you may have gotten in this trade, taken a target 1 and then held target 2 for the pullback until the rundown. So that may not have netted out to 2 trades depending on how you're trading. But you can see the black line crosses from colored to gray, short, touches the colored area again. It's got to get to positive, the second colored line to generate a buy signal. That didn't happen, and then it drops, gorgeous short signal. And I was trading gold earlier in the morning. I don't know if we're going to have time to look at gold, but this is the first group of live trades that I executed in crude oil. And the first trade ended up being a break even in crude. I entered and averaged in and then ended up getting out based on, didn't like what I was seeing. We had the same formation we talked about before. We had the action line set in a high pivot, and then we formed a lower high pivot. So I was much more interested in being a seller here. Okay, and I did, in fact, reverse short for a nice winner on this signal right here that we just kind of covered up. That signal right there. So got out of this one, break even, didn't get hurt, got into the short, gorgeous winner. And was this the trade? I think this was the trade. Yeah, this happened in the blink of an eye. Okay, this short happened. We were able to get in the trade, and then a second later we got a little bit of a spike down and got a huge 15-tick target on all the contracts on that. So that was absolutely gorgeous. Follow through sell here. You can see the black line touches the colored area and then drops back down, another short winner. One thing I do want to highlight and mention is during the summer when things were a little bit more slow and methodical, we used higher pulse settings on our pulse extreme indicator. We used settings of 6 through 15. The normal standard settings are 2 through 11 when there's more volatility, like we've returned to now. So the chart we're looking at is the standard 2 through 11. This is going to produce more trades. You're going to see during periods of consolidation a lot of whipsaw. I personally like to learn how to trade off of this chart, learning how to avoid some of the not so great trades that will occur during chop, because this trade gives us signals like this one. The 5 through 11, 6 through 15 chart settings would not have produced another short signal here. So it wouldn't have produced another short signal here. So you wouldn't have had those two winning trades. I don't even think it produced a short signal here. The only short signal the higher time frame produced was way up here. So using the more aggressive chart, we're able to get 3 additional quality signals. But the negative, if you will, is that you will get more signals that you're going to want to learn to avoid. For example, like this buy, when the market's trading this aggressively to the downside, if you're going to take a buy, you want to wait for some confirmation, like I'm going to describe over here. And if you learn just a few of those simple techniques, then you can harness the power of the more aggressive chart. Some of you will determine, you know what, Andy, I just like to have fewer signals and know that the signals that I'm getting are a little better. And that's okay. So you use the other chart. I personally look at both, and I take the best of both worlds, and we teach you guys how to do that. So down in here, we get another buy. Well, I'm not really interested in that buy at the signal, but if the action line starts to turn, I could be interested, right? And we start to get the action line to turn long. You would have had to have sat and through a little bit of consolidation before you got up to a decent target, but there was 15 ticks worth of profit available when it moved up to that area. Okay. I believe this was another one of the break-even trades. Let me think. Yeah, this was one of the break-even trades that I executed on the short side. Coulda, shoulda, woulda, got back into it. What I was seeing was we fired the buy-side signal. We did have a higher action line at the time, so I bailed out on this trade break-even, which was a good move, but then if I were a little bit more Johnny on the spot, I should have re-entered when we got moving back to the downside. Let me get that out of the way. Sorry about that. We continue on, and this is the 10 o'clock key timing window. If it weren't for that, this would have been a good-looking short, and if it played out the same way, it just would have ended up being a loser. But we don't count that because it occurred right on top of the 10 o'clock key timing window. Over here, we're more than a minute after the 10 o'clock, so it's okay to look long here. We got a bit of a bottoming formation. We got some upside divergence. Price actions moving lower. What's the OS line doing? Moving higher. We got upside divergence. Okay, that adds to the quality. Still a trade I wouldn't execute at the signal itself, but you wait for the action line to start to turn. You get into that. Nice big winner. You can see another gorgeous live trade we executed here. We had some topping action. It wasn't real defined, but if you look closely, you can see a minor 3 higher highs happen here. And that's why I was willing to be a little bit more aggressive on this trade. We also had downside divergence, triple pivot divergence. As the market was moving higher each of those times, look at what the OS was doing. Lower. You see that? Okay. So that's giving me the heads up. You know what? This market probably does want to at least retest to the downside a little bit. And as such, I was willing to be aggressive on that trade. Ended up being a big, quick, easy winner. Then we entered into consolidation. I'm going to ignore all this stuff. And if I were to bring over the 6 through 11 settings for this chart, I think there were only 2 signals in this window. The one sell that was a winner and the one buy that would have also been a winner. But it avoided 1, 2, 3, 4, 5 whipsaw signals, you know. And like I said, I personally am able to identify, and I teach, you know, a lot of our sniper owners, they love trading the active chart because they don't have too much of a problem identifying, okay, we're in a period of potential chop. Let's let this happen. First of all, these are sell signals on blue bars. See that? See how these sell signals are on blue bars? We don't want to get short on blue bars. We want to get short on green or red bars. So it's easy to stay off of those two. If you had executed either of these buy trades, you would have had a winner. Okay? So just using some simple ideas like that and then recognizing, okay, we're in chop. Let's wait to break out of the chop zone. And, of course, we talked about that very actively live. Crude oil inventory reports came out. Boom. We got all this price action in a matter of less than a minute. Aggressive traders could have looked to have gone long here once the action line started to slope up. We're more than a minute after the report. Obviously, this is a very aggressive trade, but it's a good-looking one that qualifies for me. And then we executed this trade short here. I jumped the gun a little bit, and then I averaged in. The official signal happened halfway between my standard entry and my average in. So I was a little bit early on this trade, but the net result was the same. And again, we got a nice follow through, a huge profit target, and a nice winner. Same thing down here. Boom, got long, nice winner. And that's kind of where I packed it in for the day. This short signal, okay, are we going to get short on blue bars? I just got finished saying we don't go short on blue bars, right? So we'd stay off of that trade pretty easily. That short there, okay? This short over here, not a bad trade. The reason I didn't execute it is I had determined, you see these 2 lines on the screen, that I wanted to force the market to break out of this zone before I would trade again after I executed this winner. So that enabled me to stay off of that trade. We really don't have the action line sloping down. We have a minor higher low pivot forming on the action line. So a bunch of reasons why it'd be somewhat easy to stay off of that trade. Boom, we break out. Big move to the upside, nice winner. I wanted to execute this trade live. I was all over it, but unfortunately I was talking in the room at the time and I couldn't get my hand to work correctly to execute the trade while I was talking, so it was my own fault, but I missed that trade, but I was talking about it in the room, and it was good. Why did I like it? Because we had a momentum breakout to the upside. The first trade following a quality momentum move, especially when it's breaking out of a consolidation area, tends to be a quality trade, even though it was very counter trend. So I really liked that trade, but didn't quite get it executed. And then we jammed down here till 11 o'clock. Easy to stay off of all these buys because there's no action line confirmation whatsoever. We're going to be sellers. Boom, boom, boom. Same thing down here. This short, you know, again, I'm not getting short on blue bars. So pretty easy to stay off of that one. The buy, I like the fact that we put in a little minor double bottom and we got a standard sniper signal down here, but I still would want to wait for action line confirmation. So the entry for me on a trade like this, would be up over here by this second arrow, okay? And that takes us to 11 o'clock, guys. So this short here, easy to stay off of, no action line confirmation. we're going to wrap things up right there. Thanks, everyone. We'll see you back here tomorrow.